Hi guys, welcome back again. Today is 2024, January 11th, Thursday, and let's get back to our swing trading analysis and let's plan our trades together as always. Okay, as you guys all know, I always start with the USD index chart to determine the overall strength of the US dollar. So currently in the 4-hour chart, the market is behaving consistently above the moving average. That means the trend is up, the meaning that dollar is strengthening overall against other currency pairs. So we're gonna look for USD index trend is up, dollar is strong, so we're gonna look for opportunities to buy USD dollar. Okay, so first pair USD Japan yen. So that is the interesting graphic, guys. So originally our first leg up to down was from here. Excuse me. Excuse me. Excuse me, guys. So originally from first up leg was here, from here to here. USD Japan yen market is behaving consistently above the moving average, the meaning that dollar is strong against USD Japan yen. But this, unfortunately, this leg is just too strong compared to the other leg sizes. Here, it's too leg. It's just overall this directional up movement is too big. So it's unreasonable to assume this leg to demonstrate the Fibonacci extension into 1.61. But instead, now we have the decently sized, not too small, not too big, directional wave is forming like that, and it's retracing into a good zone. But now the main question is that whether this leg will hold, right? So if I place it currently, if I buy USD Japan yen, I'm gonna put my stop loss here. But is this local minimum gonna hold? So usually that depends on the location of this 89 period, the moving average location. The meaning that ideally I want to see moving averages exceeding this local minimum point here. So ideally moving average should be behave like this. So following this rule, so it's too early to buy USD Japan yen right now. Ideally I want the moving average to cross above this local minimum point here, and I want the USD Japan yen into retrace into at least 0.5 or Fibonacci 0.38 into position, because I already bought my first bullet at the Fibonacci level 0.618. I wanted to retrace more, then I'm gonna buy it and let the profit go until Fibonacci extension 1.618. So that's my reading on the USD Japan yen. That's my reading on the Japan yen, and let's do that. Trend is up. New leg size is nice, and it's worth mentioning that new up leg is forming in the USD Japan yen, and my decision is to wait moving average to help my story. The meaning that I'm gonna wait moving average to exceed this local minimum point here, like this. I want moving average to go like this, and ideally price should retrace more than around this zone, 0.5 and 0.38 Fibonacci retracements. I'm gonna buy USD Japan yen. So right now it's too early to buy USD Japan yen. I hope that makes sense, guys. Okay, so that's what I mean when I say wait moving average to help. Okay, now let's analyze the USD Canada dollar loonie. Okay, now we have the nice leg forming from up to down here, and you see if you compare these leg size into other up and down legs, it's not too big, also it's not too small. The meaning that it's like if the trend continues to unfold, it's likely to retrace like this and reach the Fibonacci extension 1.61. Leg size is ideal. So that's what I mean. So right now it hasn't retraced enough to buy USD Canada dollar, and trend is clearly up. It's seen this chart. So that's what we're gonna notice. Trend is up, leg size is very nice, and we're gonna wait USD Canada dollar to retrace enough to buy. So interesting thing is that we have the really distinct local minimum point here. So it's likely that a lot of the retail traders have already entered the buy position on USD Canada dollar, and they are likely to put their stop losses in this obvious local minimums. You see at the price 1.3288, so we have this local minimum. So it's very likely that market is gonna continue to retrace and hit all this stop loss to collect some liquidity, then get back into original trend. So that's what I mean when I say wait the mass stop loss. So wait mass stop loss at 1.3288, then I will start buying USD Canada dollar. So decision is to wait for USD Canada dollar. Okay, next pair, USD Schweizer franc. USD Schweizer franc. Okay, so we have overall trend is down. Overall trend is down. Retracement down. You see? Down. And here we need at least 10 candles above the moving average to consider the trend is reverse, trend is up. But here we only have 1, 2, 3, 4 candles, and it's not enough to say the trend has reversed. It's not enough to say trend is up. So it is still considered the fake out. And as we all know in Forex market likes to fake out. So it's a down fake out. FO means that trend is down and it is faking out. So this USD Schweizer franc story is conflicting with our USD index story, right? And in the USD dollar index chart, we saw that overall dollar is strengthening. Here, USD is weakening against the Schweizer franc. So those two stories are conflicting. So if there's a conflicting story, we're not going to do anything. We will just wait. So that's what I mean when I say conflicting. Okay. Now let's analyze the pound USD. Pound USD, again, it's a perfect example of the sideways. Market started here, seems like it's broken down, then actually didn't broke up. Excuse me, a little bit technical. So then broke up, it looks like the trend is up, then it went back to moving average, then go out, then get back to moving average. You see, the market is behaving back and forth between the moving average, right? When you think there is an uptrend, there's actually no uptrend. When you think there's a downtrend, there's no actually downtrend. That's an indication that the market is performing sideways and there is no trend. If there's no trend, we're not going to trade. We're not going to trade, right? So that's what I mean. When I say pound USD, trend is sideways. There's just nothing we can do except wait. Okay. Next pair, Euro USD. Okay, so we have market is definitely trend is down. Market is behaving consistently below the moving average. It's likely that from here to here, first leg down, and market is still retracing. So ideally, when the trend reverses, I would like to have like a strong breakthrough like this, then retracement, then it goes back to original trend. So in this case, technically trend is still down, but my breakthrough is not really strong. I don't see any strong downtrend, so that's why I'm not trading Euro USD. Trend is down, leg size is nice, but my down breakout is not strong, so there's not strong trend. So that's why I'm not trading Euro USD. Thank you. Let's analyze the Australian dollar USD Aussie. Okay, so we have first leg down here. Nice. Market has moving averages broken out very nicely. There's a decent downtrend. Market retraced it into first Fibonacci level 1.61. At this point, I risked the 0.7% of my account, and I already sold 0.7% of my account, meaning that I fired my first shot. Now market is just behaving downward nicely, and I assume it will soon start shoot down and hit into some Fibonacci extension 1.618. So we had a good reading in the Australian dollar USD. I already sold my 0.7% of my account at the Fibonacci 0.61%. If the market still keeps retracing, and if it reaches the Fibonacci retracement 0.5, then I'm gonna sell additional 0.3% of my account, right? So I would like to have 2 bullets to trade at any given time. Okay. So Australian dollar USD Aussie trend is down, leg size is nice. What is our decision as of today? Keep the position to sell. I already sold 0.7% of account, and if market retraces into Fibonacci level 0.5 again, and I'm gonna sell again for the second bullet. Okay, so it's right now the market is really sluggish, moving up and down like this, but usually sooner or later it will return into original strong trend and likely to hit Fibonacci extension 1.618. So that's what I'm really looking for. Okay, lastly, New Zealand dollar USD. Nice. New Zealand dollar USD, again, first leg down is here. We have a lot of candles below the moving average. That means the trend has reversed. And if the market looks like it is still retracing like that, and if it retraces at least a 0.5 or a Fibonacci level 0.38 like there, so I'm gonna sell my second bullet. Then usually the market goes return to original trend after the retracement is done. Then my take profit will be Fibonacci extension 1.618, and again, of course, my stop loss will be the local maximum, which is here at the price level 1.6373. So looking at the Australian dollar and New Zealand dollar, their story is usually similar, but here in the Aussie case, we have the really nice breakdown of the moving average. The meaning that there's a decent downtrend here. Okay, so that's my analysis of the individual currency pairs. So overall, USD dollar is strengthening, and I have already entered my first trade risking 0.7% on Aussie, and if the market still continues to retrace, I'm going to sell again on the at least Fibonacci retracement 0.5 on the Aussie, New Zealand dollar, or USD Japan yen. So USD Japan yen is really pair to notice. comparing at the last few days of the analysis, because in the USD Japan yen the new leg has formed, right? So this last big up leg is just too big. I can't expect a Fibonacci extension on this. Now we have the really nice leg is forming up. I just need to wait moving average to go up a little bit more up like this, so that I'll be able to trade the USD Japan yen. So again, USD Japan yen, USD Japan yen, and Aussie are the two most interesting pairs to look at for the next several days, and also the USD Canada Loonie, because we have the nice legs and we just need to retrace it more. Okay guys, I hope it makes sense, and if you guys have any questions, please leave a comment, and thank you for your attention.